there's sort of 2 million odd landlords in this country who own rental properties or claim rental income on their tax return. When you look at any investment or any asset, I think there's always got to be a care factor about it. And, property management's no different. You've purchased this asset, you've bought it, now you've got to own the thing. And I think the critical thing there is to not have a set and forget strategy, but to actually be involved in it and to look at what's going on, because there are material benefits from doing so. I would say, particularly as it relates back to Rentbetter, is the idea of being able to save on the costs of property management, have better control, have access to the right tools and technology. And that should sort of put you in a position, hopefully, to be able to acquire another investment property sooner.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how and where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute of every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, and sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You'll hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested.
Hi, freedom fighters. Now, with my continued focus on the importance of the cash flow affordability of your long-term capital growth property investment journey to ensure that you're able to last the 15-year plus distance to reap the rewards, the one thing that makes or breaks the quality of an investor's experience revolves around the ease and effectiveness of your property management. Now, depending on who you talk to, somewhere between 20 and 33% of the 2.6 million investor-owned dwellings in Australia that are owned by just over 2 million residential property investors are self-managed. In other words, somewhere between 400,000 right up to 660,000 Aussie investor landlords DIY manage their own properties. And as any existing property investor knows, everything is fine until suddenly it's not. Because it's not a matter of if you're going to have problems with your investment properties, it's a matter of when, how big, and how often. Now, there's a good reason why over half of first-time investors sell their property within the first 5 years, and a lot of this has got to do with the ongoing time-consuming and life-sucking headache and hassles of managing the property. And when it comes to property management, often you just don't know what you don't know. And ignorance is certainly not bliss. In fact, it's downright dangerous. And with residential tenancies legislation in each and every state differing, constantly changing and increasingly stacked in favour of the rights of the tenants, how can you control the property, protect yourself and minimise the risks without giving yourself a second job? Many, like myself, have traditionally responded by deferring to professional property managers, but this can be very hit and miss. So what if there's actually a way that you can still do it all yourself, providing you have the time, the knowledge and the inclination? Well, this is where the Rentbetter platform now comes to your rescue. And to explore this and dive into the world of DIY property management, we're joined by the founder and CEO of Rentbetter, Jeremy Goldschmidt. So welcome and let's get invested, Jeremy.
Thanks so much for having me. It's great to be here.
Absolutely, mate. I think you're sort of tapping into an area that's been long neglected for a long time, but we'll dig into the details of that a little bit later. Before we do so, I'd just sort of love for you to give us a better rundown on who you are, what you do, and most importantly, why you do what you do.
Sure. Look, my I guess, background of who I am is professionally I was a management consultant for many years. I worked in banks and I worked in the wealth management space in particular. And I guess it all sort of links a little bit of who I am and why I do what I do comes together pretty quickly because when I spent time in strategy looking at the wealth management sector, there's a lot of similarities between how that sector of the market and property works, meaning you've got sort of, if you like, frontline financial advisors, or in property, you've got frontline property managers. And they sort of operate on the same basis. We're on the street every day dealing with customers. But in wealth, there was always sort of these giant investment platforms that sat behind them as a technology play that helped make things more efficient and make their lives easier. And it became very apparent to me in the early days that actually a lot of property managers didn't have that. And when I bought my first property about 15 years ago, I sort of took one look at the property manager and the management agreement that came with it. And I just sort of thought I'd slaved away. I'd worked so hard to save up for this property. And I'm sure everyone can appreciate how difficult it is to save up for a deposit these days. And I just couldn't fathom the idea of sort of handing it over to someone that I didn't necessarily trust or didn't totally know what it was they were going to do. When I looked at sort of the rent that it was getting, I always felt that property was sort of getting less than it should have. So those sort of, from my professional life to having done something personally, that sort of, I guess, came about to a little bit of the why I do what I do. And if I sort of, without going too far into my background and who I am, I've sort of got, I guess, a young family and had always had, if you like, a little bit of an interest in doing something a bit entrepreneurial. And I think, to be honest, even owning a property is a little bit entrepreneurial because it's like your own small business to some degree. You can control the levers of income and expense. And so that sort of led me, if you like, to the Rentbetter world.
Yeah, love it. Well, we'll do a deep dive on Rentbetter
sure.
a little bit later. But before we sort of kick in, I'd love for you to share something unique or interesting about yourself that you've actually never been brave enough to share publicly before, please, mate.
Yeah, sure. Look, I think the one that always comes up and that is quite interesting, and maybe it's sort of appropriate for all audiences, I kind of have this unique family background. And so what that's ended up in for me personally is I actually have 3 passports. So I have an Aussie, an American, and a Austrian passport.
You sound like a spy in
exactly.
disguise, mate.
That's exactly right. I get that question a lot whenever I've gone travelling. That comes up a fair bit. But no, look, it's a function of just my family's got a super interesting background. My grandparents on both sides were sort of European descent, but ended up, again, both my mum and dad strangely ended up in different parts of South America when growing up, and then somehow found their way to the US, where they in fact met, and then ended up going to Europe for a little while, where my older sister was born, and then back to the US where I was born, and then settled in Australia where my little sister was born. So in fact my whole family actually has different passports, which is considering we're all one family and are all very close, it's kind of a bit of a bizarre situation. But it's sort of, earlier in my professional life, I actually moved to the US for quite a few years. And so, the passport and the citizenship certainly served me well.
Love it. Yeah, that sort of ability to jump borders and sort of mix with different people in different situations at such an early age, I'm sure it's had quite a formative impact on the way you look at the world now. Would I be right?
I think so. And I think, look, there's just, there's this sort of concept of, I guess, seeing new things and having new ideas thrown at you, whether you chose to or not. The idea of having different cultures and even just, I personally, as I said, lived overseas for a bit. You just see different things and have different perspectives. And I think it's why people love travel so much, because you just have the opportunity to get a fresh perspective on things. So, for me and my family, it's very much a part of, I guess, our identity is to do with all the different parts of the world where we have family and cousins and life experiences.
Love it. Well, while we're sort of talking about the background, I'd love for you to just give us a bit of a Reader's Digest on your journey so far in terms of where you've invested your time, your energy, your money over the years. What have you learned from it, and how has it shaped and led you to what you're doing now?
Sure. I think, the start of it is probably, if I think about my professional career early on as a management consultant, I think you learn pretty quickly to work in teams, and that there's always, from a project perspective or just the work that you're delivering, there's always just a mountain to climb, and it's about, short, sharp time frames and delivering sort of, crazy amounts of work in that time frame. So I think very early on in my professional career, I learnt to invest in people. Yeah. And I think that served me quite well in this business as well, just because, often, obviously, there's a level of skill and a level of sort of expertise that people bring to the table. But I think I've always found, and it's still in many ways to date a big part of who I am, that there's sort of skill and there's will. And the people who have sort of that high level of commitment and that high level of interest in doing something, I often find, they'll punch above their weight and they'll deliver better outcomes than someone who just shows up and says, I've done this for 30 years, this is the answer.
Yeah.
So, it's a little bit of the curiosity and the willingness to try new things. If I sort of jump back to the Rentbetter business and all that we've done, and we can sort of go through that in a minute, but that is very much a part of the journey that we've been through, is trying to take something that is perhaps a less mature and evolved segment in the market and really translate it to our customer base, which you mentioned before. There's sort of 2 million odd landlords in this country who own rental properties or claim rental income on their tax return.
Yep.
There is just a huge number of them here, and for years the traditional model or the main sort of viewpoint has always been for people to go out and do a certain thing, and we're basically explaining or educating, if you like, the public in a certain way that you can do it a different way, and that's, I often say if things are obvious, then they would have been done long ago. So the answer to some of the challenges that we're trying to solve are not totally straightforward, and it does take a little bit of the experimentation and the mindset that says, hey, we're a great team, we've got good people, and we can handle any of those challenges.
Yeah, and you hit it on the head there. We become very habitual. We're so time poor that we just fall into the old habits and whatever one else does.
Yeah, absolutely.
When you're sort of pioneering new territory, new thought processes, new actions, new habits, that can take some time. And particularly with the sort of risk or perceived risk that surrounds the property arena, I can see that would take some while to take root. But sort of talking about that journey so far, what key events have brought about your greatest learnings and your best improvements so far, please, mate?
Well, I think there's probably, if I sort of try and focus in on a couple of things, there's the standard one, which might seem a bit cliched, but it's making mistakes. And I think as long as you're able to handle those mistakes in the right and professional way and course correct a little bit, I think that those mistakes become a really good thing and become a part of the journey. So to me, even small things, and I'll just sort of say the way that we used to describe certain things that we do as a business, or the way that we approached, if you like, the first setup of the business, it was with an open mind that said, hey, we're going to test this, we're going to see what works, and we're going to see how customers respond to it and adjust accordingly. And I think the sort of, it's pretty fashionable these days to talk about test and learn. Yeah. But I think that is really the faster you can do it, and almost the smaller scale that you can do it, the better off you are. And I do feel lucky, back to the previous question, that we've had the right team and the right people around for that journey, that we're able to, if you like, course correct and adjust when we saw that things weren't working the way we expected, or that, this idea which we thought was so brilliant wasn't actually going to work. So I think a lot of the sort of early stages of the journey, the critical part, and even to some extent today, the critical part is being able to learn from those experiences. And probably the other thing I'd say to answer this question, for me, if I reflect where this business or how this business came about and where it all started, a really big part of it, and again, another cliche here, but necessity is the mother of all inventions. There's sort of, I mentioned that my property journey to begin with was that I used to self-manage my property, and what happened over time was, there were certain tricks and things that I was doing. I shouldn't say tricks. There were certain methods that I employed, and there were certain ways that I would do things, and I just found that over time, more and more family and friends of friends knew what I was doing and started to say, hey, you self-manage your property. I'm interested in that. Or my cousin or my friend's friend is interested in it. Can I connect them to you, and can you help them? Yeah. And it became over a very, over a short period of time, it became very apparent that little guides or sort of steps that I'd written in emails, which were flying far and wide, were sort of, I guess, hitting or striking a chord with people who own property that were saying, yeah, I think there's a better way that I can do this. I'm interested. I'm going to give it a go and self-manage. And so to me, you know, that's kind of a formative part of this whole journey, because it became apparent that there was a huge demand for this. And if people just had the tool or the way to do things that made it a little bit easier for them, then they'd absolutely be interested in it.
Yep.
And that, you know, that, I guess it's not always totally obvious, but you just sort of find that moment in time where you put two and two together. And as I said, I professionally had one sort of angle on this sort of sector and market, and then at the same time had some personal experience with it. I feel like the sort of confluence of those two things is what really made the business and made the journey.
Yeah, love it. So tell me, if you look back on both your personal investment journey and the professional side of the equation, what would you consider to be both your best and your worst investment so far, and what have you learned from both of them?
That's a really great question. Look, I think my best investments over time, as I said, it's probably not a specific asset or a specific investment that I've made, more so to do with the people and the way we've approached the business.
Yep.
And I think if you really look at what's worked well, and I'm just going to sort of throw it out there, you probably know this better than anyone, the old comment that it's time in the market, not timing the market.
Yeah.
And early on in my career, I worked at, I don't know if you would recall or listeners would recall, Count Financial.
Yep.
Who were just this brilliant business. And in the early 2000s, I worked there actually at the end of my university degree.
Okay.
And worked in this place which was advisor services, where you did a little bit of research and supported financial advisors. And just, you know, dollar cost averaging and the concept of investing over the long term and all those sorts of concepts, which I guess academically at university I'd sort of learnt and understood them, but it really hit at home as I started to apply it in the workplace.
Yep.
And so for me, you know, it sort of speaks nicely to property, because I don't think, you know, there's a lot of excitement always about getting a huge return on a specific, you know, stock that you purchase or a specific investment you make. But I think with property, it tends to be a slow burn game.
Yep.
And so for me, that always struck a chord around, I guess, investing in property, and I was lucky that I got to invest a bit younger. But B, just having a mindset that says actually you've got to invest over the long term and sort of be sensible about where you're going in your future.
Yeah.
And I think also, as I mentioned, this sort of concept that it's quite entrepreneurial, I believe, to own an investment property. And everyone does it in this country, right? It's not like some other markets around the world where you've sort of got high institutional investment that's really concentrated.
Yeah.
You've got a lot of mums and dads, and you know, it's every profession in Australia who's investing.
Yeah.
And so I think for all those people out there, it's very much the Australian spirit, if you like, that there's a element of being a bit entrepreneurial about it, of building wealth, of making sure that you're sort of watching your investment and controlling the costs and doing all the right things to make sure that when you're ready for that asset to be at its sort of, you know, highest value and get the return on it, you've managed along the way.
Yeah, beautifully said. Let's jump to the future for a minute then.
Sure.
I'd love for you to paint us a picture of your sort of life vision and what your ideal lifestyle looks like. So, you know, make it as vivid and real as you can. What's that look like to you?
Well, look, I think as we were talking before, I mentioned that I've got 3 young children who are just, you know, the thing that makes life so great. And I have a wonderful wife who, again, collectively as a family unit, they're just so important to me. And so anytime you'd ever ask me sort of in terms of what does success look like, something that's really important to me is that, you know, that family unit and the relationships, and obviously I have my extended family and all those around it, but ensuring that all those relationships are intact and sort of, you know, as healthy as they can be is probably my number one most critical element to anything that I see as part of lifestyle or success. But I do think in today's world, if you look at how, I guess, business is changing, how interactions are changing, we really do operate in a global market. And so I think the ability for our business over the lockdowns over the last couple of years for us to be able to work so closely as a team but still be remote has been really, really important. So I think sort of flexibility and autonomy over work becomes really, really critical. And I like to think that A, as a business, and B, as sort of a person that, you know, is in the workforce, that's something that I absolutely can deliver out to our team. I think travel's always going to be a very big part of everyone, including me, wish list, is being able to see new places and new things and do it in a way that's sort of, I guess, fits into all the other goals and dreams that you want to achieve. And I think, and look, this is, again, probably something, it's a topic that you cover in many different ways. I think actually, I'll try and find the right words for this here, but
Yep.
I think purpose and investing your time in and just sort of take away the concept of dollars and a return that's financial, but more a return that might have a broader set of rewards to it is really important. And I think, you know, as I guess my wife and I have always talked quite a bit about this, that it's not like you sort of reach a point of life where you suddenly magically go, oh, I've got these 2 new hobbies that I've started and here we go, this is now my purpose. I think those things take a long time to cultivate, and it's a combination of maybe building expertise as well as interest. It's not like you can't be at 100 points on one and 0 on the other. You've got to actually balance them out over time. So to me, and you know, I do a little bit of non-profit work on the side. I think that's really sort of critical in just rounding out, again, these different perspectives and ways that you think about the world, so it's not just, you know, totally myopic.
Yeah, totally agree. Well, if we sort of putting that in context then, and I'd sort of get hard on the rational investment piece for a moment.
Sure.
What is your investment strategy to attain and maintain your ideal lifestyle long term, and where has and where will property fit into that?
Yeah, sure. Look, I think like many Australians, property absolutely fits into it. I think I've always just personally had a lean towards more of, if you like, a cash flow investment basis than just pure capital gains or capital growth.
Yeah.
Which I don't know if you have a personal view on it. I think, you know, given the last 2 years and the surging prices in the property market, I think there's a lot of people who focus on capital gains who are grinning. But certainly as a sort of younger investor who was starting out with, if you like, less cash in my pocket and very concerned about how to sort of manage and maintain assets and investments, the cash flow did become very important to me.
Yeah, I'd spot on. I totally agree. I think that the focus on growth, because you'll never retire on the rent from property, so growth needs to be a big component, but it needs to be affordable growth in the context that the cash flow and the way you structure the property means that the property's looking after itself and not biting into salary savings or lifestyle. So right on track with what you're saying there, Jeremy.
Yeah, so from my early days, and even when I looked at properties in the beginning, it was looking, you know, there's a lot of talk, obviously negative gearing is a great thing, but there was a lot of focus for me on looking for sort of neutral or positive properties, which, again, not always the easiest to find, and certainly years ago was a bit easier, but they're still out there, and that was sort of the beginning of, if you like, the first seed of my portfolio. And look, from sort of a broader investment basis, I guess there's an asset allocation question there, right? You've got to find the right things that will suit your risk profile and suit your needs. And it doesn't always mean having the sort of $1 billion portfolio. It starts small and you can make small gains and put them back in. And that's kind of back to that, you know, time in the market rather than timing the market.
Yeah.
You're in a position as you do that slowly to get exposure to things that are going to grow. And, you know, you've got in some senses, you've got the time. I'm right in that middle age bracket where I'm both looking back and looking forward rather than just looking forward.
Yeah.
But I do think that, you know, personally, I've always very much enjoyed keeping an eye on markets and, you know, in different stages of life, obsessing over property in different ways. And now, obviously, with the addition of the business, that adds a whole other asset class to my investment outlook.
Yeah, no, I love it. So if we sort of summed up your thoughts on what you believe are the keys to successful investment, what are they in your head?
Well, I think it's probably having a long-term mindset. I think that's really critical. There's always obviously the sort of short term and the shiny things, and surely there's a lot of people who are making money and talk about it. But I think having a long term mindset and knowing where you want to get to is really critical.
Yeah.
I think, and maybe this isn't always the case for everyone, but for me personally, it's really important to understand the fundamentals of the thing you're investing in. And so, that sort of stops you from just jumping at anything that you're told is good and not really understanding it. But I think, like, even if I look at my first property investment, I'm sure if we looked at the numbers and the way that it worked, it did make sense. But the fact was, it was in an area where I grew up, and I knew the demographics, I knew the dynamics of that place, I knew exactly what it was going to rent for and the way it was going to rent, because it was my stomping ground. And I think a lot of people get comfort in property because it's tangible and it's real and it's pretty straightforward.
Yeah.
So for me, I think a second, if you like, leg of the philosophy or of the approach has to be actually understanding why it's going to work and what it is that you're doing. And I think probably a third part to that would really take you towards the idea that if you're, if you're not interested in it at all, then it's going to be really hard to maintain. So I think there are obviously different asset classes and different ways to invest, and you kind of got to find something that works for you. And so I guess it's a function of the long term and the understanding of it. If it's not something that's going to work for you, then maybe it's not something to continue with.
Yeah.
You might look for a different investment.
No, I love it. If you sort of looking back and you sort of, as you mentioned, sort of halfway through the journey almost, if you look back to your first investment and were starting out again, would you do anything or invest differently?
I think probably would have gone a bit harder a bit earlier. I sort of, as I mentioned, on the cash flow basis, was always very particular about how things would work. And, with hindsight, it's very easy to say these sort of things. But, the idea that the policy settings in Australia and, population growth and immigration, excluding this period over COVID, but typically all things are going up and to the right.
Yeah.
And so the idea that, I guess, having more of a foothold in that property market in particular, that was, a little bit like Monopoly in some ways. Like the more you could get, the earlier you could get it, the better off you were going to do.
Yeah.
So I think probably would have gone a little bit harder, a little bit earlier. But I think, in many ways, I'm proud of having made sensible decisions and having thought through, and that, some of those decisions will stand the test of time.
Yeah, I love it. Well, I'd love to sort of dive into property management now in a bit more detail, Jeremy, given it's a subject that we both have a focus on. And as I often say, the longest relationship that you're going to have with your property is managing it. While the sexy stuff is about buying it, the hard work happens when you've got
Absolutely.
to manage it over 10, 15 years plus. So sort of focusing in on that, what do you see as the biggest mistakes that people make around managing their property?
Well, I think there's probably two big ones. Excuse me. And if you look, I think you said at the outset of the podcast some of the numbers in the market. You've sort of got, if you like, the traditional model has about 75 to 80% of the market, and people who are self-managing sort of form about 25%. There's some recent stats that talk about it being closer to 33%.
Yep.
So there's two bits of information that come out of that for me. The first is that there's obviously a fairly big chunk of people out there, and so, equates to about 600,000 or thereabouts who are self-managing.
Yeah.
And that number is growing. So if you look at some ATO stats a couple of years ago, it's probably closer to 25, 26%, and now, some new stats saying 33. So there are more and more people going that way. It makes total sense from if you like, consumer trends around technology, and the ability for people to just do more online. I think COVID's accelerated that too.
Yeah.
So there's a lot of people doing this, and there's a lot of people who are interested in it, and every day as a business we see more and more questions about it. And so the two big things that we see off the back of that is there's sort of this set and forget mentality that's been drummed into the population, and I think it's probably served almost from a sales perspective the traditional model that says, "I'll just leave it with us; it'll be fine. We'll take care of everything, and you'll get your check at the end of the month," which by the way, in most cases, is still at the end of the month, and sometimes is still a check.
Yeah.
So,
Good
I
call.
think, yeah. So I think obviously with technology dramatically improving, I think the model as such and the expectations of customers has dramatically improved. So I think the idea that you've invested in an asset and put serious money in it and it's just going to be a set and forget, I sort of question from the beginning.
Yeah.
And it might not be that you have a daily, everyone's got slightly different behaviours, but I know that in my younger years when there was sort of the first apps for banking, I used to find myself checking my account like 5 times a day. And it was just kind of a behaviour because you're just checking what's going on. And the same thing with sort of, share portfolios, etc.
Yeah, exactly.
And now, I find, especially with a property, it's not the type of activity that requires that checking, but it does require a level of control and management, which I think I know from a lot of our customers and having spoken to people over time, that sometimes that's a little bit less available to them when there's, well, it depends also on the different types of property manager in today's world, but someone else just saying, just leave it with me, I've got it, don't worry, doesn't suit a lot of investors who actually say, well, again, this is my asset, this is my investment, and I know that the day-to-day is the type of stuff that drives value, not necessarily just letting it all go.
Yeah.
So I think that's one really, really big thing to think about. And if you've, got a property manager and you've got your properties, just being comfortable with what's going on there and not necessarily just forgetting about it.
Yeah.
The second thing, and this is, again, it depends on the individual, but I do think that the sort of ability to control the costs, and it comes back a little bit to entrepreneurial spirit. We see different sort of stats float around about, what's the average number of repairs and maintenance events per year on a property. And we'll always hear the number of 5 mentioned from sort of traditional models, whereas a lot of landlords who are self-managing or people, and again, not to draw on your personal portfolio, Bushy, but I would expect that if you're seeing 5 events a year on one of your properties, you're probably a little bit surprised that there's so much activity there. And so I think there's kind of this entrepreneurial spirit that you can control the cost base and therefore you can reduce the outgoings. And it's not to the extent of checking daily, but it's just being really comfortable that you have an investment and the ongoing costs of managing that investment are being well managed. So it's kind of a subset, if you like, of the set and forget, which is just how am I spending to maintain this thing?
Yeah, spot on. Very good point. And it's that ongoing commitment that a lot of people, as you say, we've been sort of lulled into the old Pied Piper's view of the set and forget routine. And we all know that's a fallacy. On the flip side then, what do you think are the keys to successful property management as you see it?
Well, I think it's probably a bit of a shift in mindset. And so, again, as a tenant once said to me, there's very few places on this planet where you can go and spend 20, 30, 40K a year and be treated like dirt. and I think there's something in that because the tenant who's paying rent often feels like they're a customer, so to speak, or they're somebody who's got, a set amount of money that they're willing to pay. They've signed an agreement. They're there for the right reasons. And that there's just this intermediary relationship that perhaps has a certain formula for it that doesn't recognise that they're a paying customer.
Yeah.
And so I think from a landlord's point of view, and, if you're somebody who's got an asset and you've got someone who's in that asset and they're going to pay you rent and look after it, you just have a totally different approach to interacting with that customer, so to speak, or that tenant, where they're not an alien. They're not someone who's out to get you. And set aside all fear mongering and whatever. There's obviously all sorts of people and behaviours out there, but we do receive an enormous amount of feedback from both our customers and I guess their customers who are tenants. That just the interaction and the demeanour of everyone changes when you're dealing with the decision maker, and that they're someone who cares about how you living in your home, which is actually their asset. And we see, across the industry in property management, the sort of, I don't know if you're familiar with NPS or Net Promoter Scores.
Yeah.
Which is just basically an indicator of how many sort of, I guess, if you like, advocates or detractors you have for any particular business.
Yeah, we use it in our business, actually.
And
it's a really good check-in to see how things are
tracking.
tracking.
So look, for us, it's one that we're super proud of because our score has been through the roof since inception. We sort of have 80 plus as a score over a long-term basis. But I think
Awesome.
that the general property management industry is like close to zero or sometimes negative.
Yeah.
And it's not any one person's fault, so to speak. I think the model is just a little bit challenged when you've got an individual who's got a very large portfolio with, a high coverage ratio of the number of properties that they're dealing with. The tech might not always be up to scratch, and just quite frankly, it makes it a little bit difficult.
Yeah,
So,
particularly in those. Unfortunately, the industry is almost in a lot of cases. Where there's a real estate sales office, the property management's treated like the leper at the party and the poor cousin. And
Exactly.
It's under-resourced, it's under-supported, and that's where the industry can get a bad reputation. That there are, like any industry, there are also some very good performers, particularly where it's a dedicated property management office, and they are, like you and I, mindful of the long-term approach to the exercise, but they are hard to find and few on the ground, unfortunately. So
I would 100% agree with that. And I think, one of the things that's so interesting, as you say, it's the poor cousin. For us as a business, it's always been the most wonderful thing because we'll get, many customers call every day to say, I just had this horrible experience. I went to Google and I found you guys and I'm so grateful. And for us, we all often joke that, we've sort of got this hidden sales force out there who are irritating their customers every day and then sending them our way.
We've got a mortgage broking business, Jeremy, and I say the same thing.
Right.
Thank heavens the banks do a bad job, because if they did a good job, no one would need us.
That's exactly right. That's exactly right.
No, I love that. Well, I want to sort of turn to the risk side of the equation a bit as well then, because it's, I find a lot of people, again, probably sold the dummy on that set and forget routine, go into investing in property without really understanding the risk. What do you see as the biggest risks that need to be considered, particularly in relation to the property management front?
Yeah, look, I think there's, and again, there's a wonderful amount of fear mongering that goes on that, to some degree, there's elements of that need to be considered and thought about, but to some degree, it's just an old mindset. And my favourite one is always that, at 2 a.m, the water tank's going to burst and you're going to get called from your tenant and you're going to have to go there and mop the floor. And I just, again, it always makes me laugh, that one, because, again, Bushy, I suspect you've got enough experience with your properties, and I wonder how many have had a water tank burst at 2 a.m, and I wonder how many times the property manager has been the first call or has answered the call.
Yeah.
I just think there's a practicality to it. And again, we had an issue with plumbing in our own house a couple of weeks ago, and what did we do? We called the plumber. There's certain things that can be, if you like, mitigated and be less of an issue. The two parts, I guess, that we always look at around property management is there's a sort of financial element, which has to do with payments and money and just making sure that's all sorted. And then there's kind of an administrative side of things, which is documents and making sure that, things are done properly.
Yeah.
And the financial side of it, what we generally have found, and our customers sort of give us really positive feedback around this, is that technology has sort of led the way in making sure that a lot of those elements, in fact, are far superior to what most property managers can offer today. And what I mean by that is it's about having a payment schedule that relates back to the lease agreement, which was already signed as a legal and contractual, a legal contract and is a document that everybody's party to.
Yeah.
And making sure that those payments happen on schedule, and if they're not and there's going to be an issue with it, that there's a way to catch up or make those payments and record it and receipt it and do all the right things. When there's, and depends on which part of the country and which property type you've got, we see a variety of different behaviours around whether you sort of, take on the utilities and bill for usage, or whether you just, incorporate into the rent. But the ability to capture those things, transfer the cost to your tenant where you need to, and make sure that everyone, again, has a clean record of it, knows what it's for, why, and when it's happening.
Yep.
In my opinion, as we laughed about before, the sort of sending a check at the end of the month doesn't cut it. And where we actually see a lot of problems from people who are switching over to us is when they receive a ledger or, if you like, a sort of historical account of what's happened with their account with an existing property manager, is the ability for the property manager to explain it to them is surprisingly limited.
Yep.
And it ends up being a finance person in the back office of the business who has to actually go through what happened and when, because it's not as clean as they'd like. So
yeah,
from our perspective on the payments front, of course, someone can not make their payments and our system will alert them immediately. And then there's always a discussion that can be had. And the general consensus from our customers is having that info in real time rather than allowing arrears to build up over, 2, 4, 6 weeks.
Yep.
The system actually is going to head it off much, much faster and help you to avoid any sort of tribunal situation because you know the issue right away. So that seems to be the main category of questions that we've received, and over time has proven to be quite helpful.
Yep.
Where there's probably the secondary concern, and sometimes it's more a perceived concern than a reality, is just the idea that, well, what if someone's going to destroy my place? What if that tenant's going to come in and they're just going to, take a baseball bat and bash holes in every wall and destroy everything or steal everything? And for that, and I think you probably, again, would be pretty comfortable with this. It happens in the space, in a world where you've got a property manager, right?
Yeah.
There are people out there who can do those things, and there's nothing that I can ever say that would make it totally foolproof so that it can never happen. But what we do believe, and again, we do get a lot of positive feedback on this, is that there's a couple of control points that you can use in the process, which we do believe help. And so the first and biggest step to any tenancy is obviously receiving and reviewing an application and accepting that tenant into the property. And sometimes, not saying all the time, but sometimes we do hear some horror stories, and I'm always mindful of horror stories because it's, one story and you're trying to tar a whole industry or brush a whole industry with them, which isn't right. But, sometimes people are in a hurry to get a tenant in because that's how they get paid. And it could be that their tenant maybe didn't have all the right checks done, or the reference checks. There's a very big trend at the moment towards just sending off an email without actually doing a proper reference check. And, you can put any email into your application. Maybe it's your other hidden email. So from our perspective, there's sort of, a bit of a triangulation that goes on from a landlord or from a property owner back to that new tenant, which is a function of seeing them on paper in the application, being able to do the reference checks and actually understand from a judgment call, if you like, having met this person who they are.
Yep.
And then finally, there's obviously, through Equifax, and there was actually some coverage yesterday in the paper about their national tenancy database and what they're doing to beef that up. And I think it's just getting some information for you to make a decent decision in the same way that you would have made a risk assessment when you purchased your asset. You're kind of about to establish a credit risk with this tenant.
Yep.
In some ways, I would believe that you as the asset owner are well equipped to make a decision over who's going to look after that and make sure that they can pay.
Yeah, exactly right. And it is. It's like employing someone. You don't just for 5 seconds go, yep, you look pretty good. Away you go. You go through a whole series of checks and balances, and
that's right.
That needs to occur. And again, sort of deferring to the property management office tacked onto the side of a sales focused business, then shortcuts can happen and issues arise. So it comes down to that level of due diligence that's being applied, whether it be you as a landlord or the property manager to do so. You've sort of touched on a fair bit of this, Jeremy, but why do you think people are better off self-managing versus utilising a property manager?
Well, I think there's a couple of angles to it, right? The first is what we would always call the sort of cost equation, which is not the main driver, but it is a big reason for doing a lot of or for changes in behaviour. And what I mean by that is if you can save a couple of grand a year by managing your own property over the life of that property, because it's a long-term investment, it's pretty meaningful. If you've got multiple properties, it becomes even more meaningful.
Yeah.
So I think if you're talking about saving up for your next deposit, or if you're looking, again, you mentioned you've got a mortgage broking business. I suspect that if you told your customers you can shave 50 basis points or 0.5% off their interest rates, they'd all sort of perk up.
Yeah. Yeah.
And obviously, depending on the loan size, if you look at what you can save on property management, in theory, it's about the same or equivalent, on a 500K loan or similar.
Yeah.
You can actually offset any of the interest rate rises. Excuse me. You can offset interest rate rises as they come through to some degree.
Yeah.
But by doing this yourself. So there's an element, I think, of just cost savings.
Yeah.
I think the second element from a lot of our customers is about control. And we often liken it to if you saw the explosion of self-managed super funds over the last sort of 25 years.
Yeah.
A really big part of that was not necessarily about the cost savings, but it was about the control and transparency, and that someone, who's got this amount of investment believed that they could either make a better choice on where that investment goes or decide which assets it's allocated to and do it in their own sort of self-managed way. And we kind of look at it the same. We get the same sort of signals, if you like, from our customers around. They just want to know what's happening, and they want a system where it's all controlled in, and it's not a day-to-day task for them, but they're on top of what's going on because the system tells them.
Yeah.
So control becomes a really big element. And I think probably the final piece, which is what you described a moment ago, is the trust piece. And, the biggest risk to our business, similar to the way you described, is if everyone did a really great job out there at really great prices, then maybe no one would ever consider self-managing. But the fact is that, and there's sort of, Roy Morgan's got their annual survey of professions, and I think real estate agents have ranked down the bottom for the better part of 25 years now. Mm-hmm. And it's hard to go a weekend or a week without hearing a friend or family member tell you a story of how they were wronged somewhere by a certain profession. So I just think that there's a lot of individuals out there who are now used to using technology and platforms, who are used to doing things themselves. And I think, Airbnb is obviously not the same as our business because it's short term, and so there's obviously different elements to it.
Yeah.
But as more and more people are used to it, I think that helps us.
Yeah.
And if I look at, the very early days of our business, and I sort of have this memory of drawing up a bit of a plan. And if you look at the ownership structure in this country of who owns all the sort of, we talked about 3 million rental properties and who owns them and what's the demographic. And it's something like 60% are over 50. And it makes total sense, right? It takes you a while to save up a deposit. All the 15-year-olds in this country can't own a property. It's too hard to save up for a deposit. You're going to have to be sort of 30 plus before you've had enough time to save.
Yeah.
And so we originally drew a line through that 50 plus segment and said, that group's not going to be that interested in using a platform. And sure enough, in the early days, the very early adopters of our platform were in fact those who were sort of pre-retirement or just early retirement. And they were looking to either protect their retirement income or just sort of a more, if you like, rewarding or just a hobby almost that they've got on the side, which is managing their properties.
Yeah. And
what's happened over the last sort of 18 months to 2 years, which has been a really interesting shift for us, is as we've grown bigger and had more exposure to the market, what we've actually found is the sort of, I'll call them the younger demographic, which is a more professional set, probably sort of maybe 35 to late 40s, who are coming through and saying to us, I'm I'm about to settle on my next property, or I'm just doing the final, ticks, crossing the T's and dotting the I's on a contract to purchase another investment.
Yeah.
And there's no way I'm going to go through the traditional model. I'm signing up to the platform.
Yeah.
And it's been really interesting because I think it's a change in the sort of mindset of people that the consideration set for what to do once I've purchased my property has totally changed. And I think that that's actually going to accelerate over the next couple of years as more and more people are just used to doing it themselves. It kind of changes the proposition for what it means to be full service property management.
Yeah. Yeah, good call. So if you were to sort of paint a little word picture again of who is going to be best suited to the Rentbetter DIY platform, also paint a picture of who wouldn't be the right fit?
Yeah, sure. I think we've always been really surprised. As I mentioned, we started thinking that it was not going to be people who are over a certain age bracket, and we started thinking it was not going to be people over a certain income bracket. And we've proven to be wrong on both accounts, because we actually have quite a few senior executives who'll show up and they'll just say, I was paying someone down the road to do this, and I've realised that I was chasing and doing stuff anyway, so I may as well just take it on, and this is great. Cheap as chips, and it works. So for us, we think that obviously the starting point is anyone who's got an investment property or who's considering one. It really, if I guess the ability to get a higher return on that investment is important to you, then we are certainly something that you should look at.
Yep.
As an individual and a particular sort of mindset, I think if you're someone who's traveling 95% of the time, and if you're somebody who just says, no, I'm not interested at all in looking at this, then, maybe that's not going to fit for you, because if you're constantly on the move and you're just too busy, or even to some degree, depending on life stage, you might say, well, we've just had a newborn right now. It might not be the right time for me, but perhaps, in a couple of months.
Yeah.
So I think that there is some element to it. And then, look, the third part is probably proximity to property. So we're increasingly adding new features and functions and services through the site with the goal of allowing anyone anywhere to manage their property successfully. But there's still certain elements that might involve someone being close to the property or doing something. And so that's where, we'll get to a place where it's 100% you can manage from anywhere, anytime.
Yeah.
But there's still certain elements where we see customers say, oh, actually, for right now, I'm moving to another geography. It might not make sense for me to do this. So more and more we're adding features that stop that coming up at all, which is exciting.
Yeah.
But I think it is part of it.
Yeah, love it. Let's drill into the dollars then for a minute. You sort of touched on that earlier. What is the cost of Rentbetter, and how does it compare with using a property manager, just to put some shape around that?
So we typically see most customers come through on what we call the Rentbetter Way package, which is $149 up front and then $25 a month to remain on the platform. So you're sort of looking at $449 in that sort of first year, and then depending on the term of the tenancy, obviously that changes. But it just, again, from a depending on your average rental price, it sort of comes in at 1 to 1.5%, even though we charge a flat fee. So obviously if you've got higher rent, it's going to be lower than that.
Yeah.
When you compare that to, if you like, the cost with a traditional property manager, they're probably going to get in somewhere close to probably over 2K a year if you include, obviously, the costs of letting the property or finding a tenant.
Yeah. Yeah.
So it ends up being close-ish to 2K a year that you can save per property. There's also obviously a whole bunch of ancillary other costs that get thrown in with a traditional manager, which sort of can take that cost a bit higher.
Yeah.
So from a landlord's perspective, again, we sort of round it up to about 2K a year that you're going to save. And the ongoing costs through the platform are pretty minimal. We just think that most people take a look at it and from a rational perspective pretty quickly get to the place where they're like, oh, actually this is great, and at the very least I'm going to give it a go. And we've built up quite a loyal customer base.
Yeah, love it. I want to touch on the area of the legislative requirements, because as you would know, there's been a significant shift, and it's progressively moving way around the country from Victoria, New South Wales, Queensland, where the legislation clearly does tend to favour the tenants, unfortunately. Is Rentbetter positioned to help landlords to actually be able to comply with the current legislation, and particularly notice periods and all the rest of it that goes with that? Can you sort of give us a feel for how that shapes?
Yeah. No, I mean, basically the way we've got is for each state and territory, the sort of lease agreements and the legal requirements are baked into the platform.
Yeah.
It's interesting, though, because the thing that we find, and we find less of it with self-managing landlords than we would with the sort of traditional model, is the one that bothers people, is particularly, as you mentioned, around, and let's set aside COVID for a second, because there's a whole bunch of sort of unique one-offs that may never, ever occur again. But there was a fair bit of volatility in lease agreements and people doing all sorts of funny things.
Yeah.
The one point that seems to have been a sticking point for a lot of people around those notice periods and changes and how it works is kind of back to this idea of, can I get out of my lease agreement if I need to?
Yeah.
And it's a thing that seems to bother people, because you have signed a lease agreement and it's got a contractual term attached to it. And what ends up happening in that situation, and let's just assume that maybe the tenant lost their job and they want to break the agreement, or go to the other extreme that says the tenant just simply doesn't want to be here anymore and they want to get out of their lease agreement.
Yeah.
Now, an enormous amount of time and effort is spent using, if you like, the stick approach rather than the carrot approach. And I think with that stick, it's where we certainly hear from our customers or see in market a lot more friction caused, because I think people are trying to enforce certain legal requirements that sometimes may not be worth enforcing. And what I mean by that is if a tenant wants to go and a tenant wants to leave, the actual benefit of enforcing the agreement, now certainly there's terms and there is legalities around it that should be enforced, and obviously when you sign a contract you shouldn't do so on the basis that you're going to break that contract or breach the term of the agreement or the terms of the agreement.
Yeah.
But there is also an element of being able to act quickly, and if there's a situation where, based on what's been written in the legislation and what's been updated and the notice periods and all the rest, where an amicable outcome can be arrived at pretty quickly, which doesn't incur huge extra costs and times and all sorts of stuff, then we often think that the carrot approach is way better, which is basically, you want to leave, we can spend months fighting you. Why don't we just move on quickly and get the next tenant in?
Yeah.
And, particularly right now where vacancy rates are, I think, at their lowest in, I can't remember what the number was, but it was like 20-something years. It seems to me that for most landlords, and again, we hear this day in, day out, the idea of trying to sort of fight is maybe on a principle basis you want to hold the line, and that's why there are now more standard terms around, what does compensation look like, what are the terms and notice periods, etc. But for the most part, the best thing to do is to sort of, rule a line through it and move on.
Yeah, and let's face it, as humans, we're dynamic. And we're not static. Our needs, issues, and whatnot change over time. And if you sort of embrace that and look at, okay, what's the win-win here? How can we manoeuvre this in such a way that it's if the tenant wants to get out, or if a landlord needs to sell the property, or wants to take the property back, or any of those sort of triggers, if there's a more reasonable approach that doesn't sort of start to getting black and white and sort of legalistic, which can happen if there's an intermediary involved, because they just sort of stick to the knitting, then I hear what you're saying, that there's much more opportunity to manage that. But the other thing that I'd love to just sort of touch on as well, because the property management profession have, again, and whether it's fact or fiction, I don't know, but that quite often in times gone by, they used to talk about the fact that there are some specialist landlord insurers who won't insure a property unless it's professionally managed or on a claim if the legislation hasn't been strictly adhered to. What's your thoughts around that subject?
Yeah, every now and again we get a question about that. From what we've seen, there's certain policies, and sometimes they're actually. I shouldn't claim to be an insurance expert. I'm certainly not. But where you look at certain policies that may have been sold through a specific agent, sometimes there are terms in there that relate to that. Yeah. I think there is a bit of a myth that sometimes the policy or the premium will go up if there's no agent, and I recognise there may be a circumstance where that happens, but it's not something we've really come across. And I think all the major insurers, as far as I understand, will have a policy and not have any sort of legal issues with someone self-managing. It's, if you went on to any of the sort of fair trading consumer affairs, it's a totally legitimate. It's not as if there's sort of something to be ashamed of or hidden of. It's totally out in the daylight that everybody knows this occurs. And as I said, more and more people are doing it. So I think, as far as I'm aware, all the major insurers have there's no impact if you're self-managing or you've got an agent. But I do know that there's a couple of providers who might go through agencies for distribution that have some terms in there.
Yeah.
And again, happy to be fact checked on that, but that's my understanding of it. And it's not, as the myth goes, it's not, it is a bit of a myth.
Yeah.
And sorry, you had a second point in there, which I've...
Yeah, no, that's okay. You've covered that off pretty well, really. I guess just to sort of close the discussion around the whole rental exercise, I'd love, given you're active in this space every day of the week, what's your current outlook for the rental market across the country moving forward, given we've just come through a once in a 30-year exercise as a flow-on from all of the money and everything else that's been poured onto COVID?
Yeah.
What's your outlook for what it looks like, and what does that mean to landlords that are looking to self-manage moving forward?
Yeah, look, I actually think it's a super exciting time because there's sort of two fundamentals that have been sort of driving the market for the last little while. The first is all this sort of surge in prices or house prices, and the yields haven't kept up with it. So the rents haven't moved as fast as the prices have. And so I think if you're a landlord right now, in actual fact, and you can see it already happening in the markets, the rental prices are going up. And just to keep up with surging prices, they'll I believe, continue to go up for quite some time.
Yeah.
The second factor is we've been totally starved of immigration for the last couple of years. So I would hazard a guess that the 200,000 immigrants that typically arrive in this country that haven't for the last little while would mostly be renters.
Yeah. And
so there's number one, we're already seeing vacancy rates at a super low level. As you add more immigrants who are coming into the country, you should start to see obviously more demand and more supply issues. So that's those two things should sort of favour landlords. I think interest rates going up probably scare people a little bit, and with good reason. People are stretched, but I think for the most part, the investor market tends to have a bit of a buffer there, and have the opportunity, if you like, to sort of look at, well, even if interest rates move up a few points, there's still the opportunity there to maybe take advantage of a lull or a hesitation in the market and find those assets that make sense.
Yeah. Yeah.
And I do think for the individual, again, mums and dads in this country who are the vast majority of investors, it presents, if you like, also more opportunity to, if you like, expand the location of their portfolio, because certainly regional, which was less exciting, or maybe not even regional, just non-metro, was not such a sought after area. And I think what's happened is it's not quite leveled the playing field, but certainly increased the value of assets in those places.
Yeah. Yeah.
So it becomes an exciting time, and a part of me thinks there'll be a little breather now as everyone recalibrates, and we'll go on to the next phase of property growth in this country.
Totally agree. No, well said. I want to sort of shift gears now, if we can, into what I call the ambush round, which is just the fast four that every podcast gets you to tap dance on. So first of those, Jeremy, is what's your favourite quote and why?
I have one that, in fact, my dad always used to say to me that's always stuck with me, and I think it gets credited to Napoleon, but may come from a time before that, which is, "I'm in a hurry, dress me slowly." And it meets my, interest in property. It meets my investment philosophy. There's an element of there's lots going on. Just take a deep breath and look around and think about what's happening, and you can make some clear decisions. So it's one that's actually sort of stuck with me around patience and persistence, and just generally been important to me.
Love it. I haven't heard that one, and that is a cracker. I'm going to borrow that from you, mate. Now on the literary front, what would be the top book that you'd recommend the listeners have a read of, and why?
Yeah, there's a whole series of books that I would say I sort of grew up reading that were always had a bit of an entrepreneurial flair to them. There's one which is probably lesser known, which is called The Apprenticeship of Kravitz. And it's about a young kid in the US who sort of grows up desperate and aspiring to be sort of big business titan, and all the sort of to's and fro's and what happens in the experience. And there's just a lot of lessons in it. And I've always, it's always been in the back of my mind of this sort of, young kid hustling, trying to get somewhere. And, I guess to take something out of it, that there's endless paths to get there, and there's many ways to skin a cat, and you just keep going. but you've got to be mindful of what the important things that you can't sort of do away with along the way.
Never heard of that one either, mate. So
I'm 2 from 2.
Yeah, exactly. The Apprenticeship of who, Kravitz?
DUDI.
There you go. Love it. No, I'm going to put that on the Kindle list once we get off
Good.
today. That's awesome. Now, just sort of circling back to the investment front for a second, what's both the worst and the best piece of investment advice that you've ever received today?
Look, the best advice I've probably ever got is maybe something I mentioned a little earlier, which was around it's time in the market, not timing the market. And I think it's sort of back to this, you just have to have the right mindsets, which means I'm going to save a little bit and I'm going to put it into something that's going to have long-term capital growth or long-term growth. Because I believe I can get a better outcome that way. So for me, and I, credit it to some degree back in the early days when I said, I was at Count Financial, just understanding that approach made a huge difference to me.
Yeah.
And so that was probably the best advice rather than, put money in this stock. That certainly helped. I think, look, when it comes to the worst advice, it probably does come down to, just buy this stock. It's a specky and you'll get a huge return, and taking a little gamble on it. I'm not a big gambling type person. I actually, it just doesn't work for me. So, things that have been just do it, it'll work out, have never worked well for me.
Yeah, no, I love it. That's awesome. Now, what about a personal habit or a rewarding ritual or a daily discipline that you've sort of adopted over time that you believe's contributed most to your success today?
Yeah, look, I'm sort of a bit of maybe a creature of habit in that I've just always had a little notebook with me through my professional life where, in any meeting or whatever, I just write things down. I've got a pretty good memory for visual things, so just writing or drawing something, it sticks. And so I've always had a bit of a process at the end of the day just to quickly flick through my notes from the day and almost say to myself, what's the number one thing I've got to get done tomorrow?
Love it.
So it's a bit specific and small, but it's always just been really important to me as a recount of the day and what do I need to focus on. And that, becomes increasingly difficult as our business grows and there's just more and more of these things that are urgent to focus on. But I've always found that pretty good. And something that I've not started but was recommended recently and will start to do is almost taking that to the next level and looking at sort of journaling and just writing stuff down in more long form, which is probably something I'll explore in the next little while.
Yeah, I love it. Awesome. All right, well, if I sort of got you to summarise our awesome conversation today, what are the key takeaways that you'd like the audience to focus on?
Well, I think when you look at any investment or any asset, I think there's always got to be a care factor about it. And, property management's no different. You've purchased this asset, you've bought it, now you've got to own the thing. And I think the critical thing there is to not have a set and forget strategy, but to actually be involved in it and to look at what's going on because there are material benefits from doing so. I would say, particularly as it relates back to Rentbetter, is the idea of being able to save on the costs of property management, have better control, have access to the right tools and technology. And that should sort of put you in a position, hopefully, to be able to acquire another investment property sooner.
Yeah, love it. Very well said. Tell us what's next for you and Rentbetter, Jeremy, and for those listeners who have really picked up their ears and going, yeah, I really need to dive into this, how can they find out more and get more involved with you? Yeah,
sure. So I think, look, the first and best step is if you go to rentbetter.com.au, which is the two words pushed together, rentbetter.com.au. There on that website, you can get started if you're ready, but you'll see a whole bunch of really great tools that are available for you. There's an ebook, which is a guide to self-managing. There's a switch from your agent kit if you are so inclined to do so. And there's also a pricing report if you just wanted to know, I guess, based on sort of market trends and historical numbers, what do you think you could get for rent? And so those three tools sort of start people on their journey. And then we do run a bunch of educational workshops where people will come through and we get a lot of really positive feedback about that. So you're most welcome to get in touch about that. And look, I think in terms of where we're heading now, we're at a really exciting time. We did another round of funding not that long ago, and that's given us sort of a bit more fuel in the tank to grow, which is what's happening.
Yep.
And the idea that we're sort of attracting more and more partners to the business, which enables us to do more exciting things, like allow people to, for specific tasks or jobs or services that they do need help with, they can actually book an individual to do certain things. The ability to start looking with partners to white label our platform and just offer it to more people in more ways. So it's been a really exciting couple of months, and I think the next 12 months will be equally, if not more, exciting.
Awesome. No, it's as you've sort of pointed out through the conversation today, there's an element of control that technology really assists with, and for those who want the ultimate control and just either don't trust or have some doubts around getting a third party to do it, then what you're bringing to the table through the Rentbetter platform has got to be a great opportunity, and a growing and evolving one as you and your team continue to get a handle on what landlords are looking for and the tools that they need to be able to do that bigger and better moving forward. So, mate, I really appreciate you spending the time and being generous with your time on the show today, and look forward to keeping in touch and focusing on the ongoing growth of Rentbetter.
Absolutely. Look, thank you for having me. It's been an absolute pleasure to talk to you today.
Thanks, mate. Talk soon. Bye for now.
To get a summary of all this investment gold in the show notes, just email me on hello@khgroup.com.au. That's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/get-invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening, and as always, dream as if you'll live forever and live as if you'll die